Yeah, yes, yes. Good evening, students. Welcome to all of you. So, students, today, as you know, we shall be revising chapter 7, that is completion interview, and also chapter 8, audit report, through the medium of questions, which we have specially selected for you. So, before we proceed to those questions, so let us get familiar with the main contents of chapter 7. So chapter 7, students, as you know, deals with these essays which I have written. Essay 560, 570, 580, 450, 260, 265. Quickly, students, tell me the name of essay 560. Quickly, yes, Harshit. What does essay 560 deal with? 570 and 580 first. Yes. Quickly, students. Now just a about 1 month is left for your exams. Yes, subsequent events, that is right. 570. Yes, 570. Yes, students, come on. What does 570 deal with? 570 and 580. Yes, going concern. Yes, Miss P. Gemini and 580. 580 deals with written representations, and 450 deals with evaluation of misstatements identified during the audit. 260 deals with communication with those charged with governance, and 265 deals with communicating uh, significant deficiencies in internal control. Okay. So, students, as you know, 560, you have read accounting standard 4 in your accountancy. So contingencies and events occurring after balance sheet date. So SA 560 deals with subsequent events, means those events which have occurred between the date of financial statements and date of auditor's report, and facts which became known to the auditor even after the date of auditor's report under certain situations. Okay. So you have read about the auditor's responsibility in this regard, that he has to consider the effect of those events which occur between the date of financial statement and date of auditor's report, because he has to see all the events up to the date of auditor's report. Okay. And always remember in your minds that subsequent events are of two types: adjusting events and non-adjusting events. So adjusting events basically provide evidence of uh, those conditions which relating to date of financial statements, and therefore these require adjustments in the financial statements, whereas um, those events which throw light on the conditions which arose after the date of financial statements, those are called non-adjusting events, and uh, they require disclosure in the financial statements. Okay. So just a quick overview of 560 and 570 going concern. It deals with the going concern. So students, tell me what is going concern. You have read it in accountancy. Yes. Quickly, tell me what is going concern. We have to complete this overview in next 5-6 minutes, students, so that we can switch over to questions. Yes. What is going concern? What it is when we say that an entity is a going concern or entity is not a going concern? So what basically it is? Yes, come on guys, quickly. Okay, to be more precise, in terms of accounting standard one, which you have read, what is going concern? What is going concern? Yes, that's true, Harshit. But what I am trying to ask from you is, what is going concern? You have, what does this mean? Basically, it is a fundamental accounting assumption. You have to remember it always, always in mind, always in your mind. Uh, Keep it established in your minds that going concern is a fundamental accounting assumption. There are two other accounting assumptions. One is consistency and another is accrual. Okay. So financial, what is its significance? What is its importance? So we say that when we say that financial statements are prepared on going concern basis, it implies that the firm would continue, that the concern would continue in the foreseeable future, and therefore it is why that the assets are recognized, because they are going to be realized, and liabilities which are reflected in financial statements, they are expected to be paid. Okay, if a concern is not a going concern, then its financial statements may have to be prepared on liquidation basis, like inventories may have to be written down at their realizable value. Okay, so always understand, always remember the importance of uh, going concern, which is a fundamental accounting assumption. It is the very basis on which financial statements are prepared. That is why it is called fundamental accounting assumption. Okay. And what is 580? So 580 students, as you know, is about return representations. So the auditor obtains during the course of audit return representations on various matters from the management. And always remember that return representations are, although are audit evidence, but they are not sufficient appropriate audit evidence by themselves. Although they are a necessary audit evidence, they have to be taken by the auditor, but they do not themselves constitute sufficient appropriate audit evidence. Okay, like say management is giving you a written representation on a certain matter. Okay, like on some say contingent liabilities. So you accept that paper and keep this paper with you, and you do not perform other procedures. Okay, so therefore, although these are necessary audit evidence, but these are not sufficient appropriate audit evidence by themselves. So this has to be the obtaining of written representation has to be supplemented with other audit evidence obtained by performing other audit procedures. Clear, students? Quick overview. So now let us start the questions. Now read question number 1. CA Yash is conducting audit of a company for year 23-24. The company is engaged in export of ethnic rugs to buyers in Europe. So company is engaged in export of rugs. The audit is nearing completion in the month of July 24. Okay. So however, it becomes known to the auditor that one of overseas buyer has made a legal claim against the company on 1st June. So buyer had made the legal claim against the company on 1st June 24 for injury caused to a customer of one European buyer due to substandard dyes used in rugs. in one lot of order shipped in August 23. So these dates are important. So you see the sales have happened in August 23. So claim has come in, legal claim has come from the buyers on 1st June 24. The audit is going to be completed in July 24. So auditor has come to know that some harmful dyes have been used while coloring those rugs, and as a result of it, some customers of that buyer to whom the product was sold, they have suffered some injuries like you see rashes on the skin, etc. So the management of the company has decided to agree an out of court settlement for rupees 5 crores. So management doesn't want to get a bad name because it would affect their business, it would affect their reputation. So they are possibly agreeing on out of the court settlement of rupees 5 crores. The financial statements of the company are silent on this issue. Discuss how CAGS should proceed to deal with the above issue. Now tell me, students, whether it is this event, as you know, it is a subsequent event. It is clear now whether it requires adjustment or disclosure. I am going one step further. Yes. So students, the shipments relate to year 23-24. So obviously it is providing evidence of conditions relating to events that existed as on the date of balance sheet, as on the date of financial statements. So what are the audit procedures the auditors would perform? So he would perform audit procedures to obtain sufficient appropriate audit evidence between the date of financial statements and date of auditor's report, and see that its effect is clearly required. Yes, Harshit, you are right. It requires adjustment. Its effect is clearly reflected in financial statements because it is on those financial statements that auditor is going to give his opinion. Okay. So, and obviously, in respect of subsequent events, the auditor would also be obtaining written representation of the management. So that is another form of audit evidence. Clear? So see question number 2. A deficiencies or combination of deficiencies in internal control that in the auditor's professional judgment is of sufficient importance to merit the attention of those charged with governance. Basically, these are called significant deficiencies as per SA 265. As per SA 265. So give examples of indicators of significant deficiencies of internal control. Yes. Can you think of some examples of significant deficiencies of internal control where internal control is lacking? It is not working. It is not able to detect material misstatement, and it is of such nature that management needs to be informed about it. Yes, guys. Can you give some examples? These are given in your module in SA 265 in chapter 7. Yes, students, can you give some examples? Related party transactions, Harshit Jaiswal, it's okay, but you have to write internal control. You have to link it with internal control. Like indications that significant transactions in which management is financially interested, related party transactions which you are saying are not being appropriately scrutinized by those charged with the governance. So it means that the control instituted is lacking, is not working properly. Okay. Or some fraud has occurred that was not prevented by entity's internal control. Absence of a risk assessment process within the entity where such a process, say in risk assessment process, students, we have read in chapter 3, entities risk assessment process is a vital part and parcel of the internal control. Second step, second component of internal control, you remember, first was control environment, second was entities risk assessment process, that an entity should also have a risk assessment process to address the business risk, to identify and address the business risk. Okay. So it is also an example of control deficiency or evidence of ineffective aspects of control environment. So these are all rather points of control environment. Okay. Evidence of management's inability to oversee the preparation of financial statements. So if management is not serious about the oversight of method of preparation of financial statements, then again it is an example of significant deficiency in internal control. Yes. See question number 3. Now this question is about SA 570. Now read this question. See, there is a company. So what is given about the company? The company has defaulted on loan repayment. The current liabilities exceed current assets by 50%. Current liabilities are more and current assets are less. So what would happen if current assets are less and current liabilities are more? The current ratio would be not healthy. It would be down. Okay. So sales revenue has declined by 30%. Sales are also dwindling. These are also coming down. So management has not performed an assessment of company's ability to continue as going concern. But they say like we are implementing various measures and we are discussing it with the bankers for restructuring the loans. So they are just giving assurances. Okay. So which additional audit procedures need to be performed by CA? So these are events or conditions, examples of events or conditions which indicate that a material uncertainty may exist about the ability of entity to continue as going concern. Okay. So these are examples of financial events. You have read in SA 570. There are 3 types of events: financial events, operating events, and other events, which may help in deciding that whether a material uncertainty exists about whether an entity would continue as a going concern or not. So in these situations, which additional audit procedures should be employed, should be performed by CA? Yes, friends. This is very well explained in your module in chapter 7. Now, The question is asking about additional audit procedure, not the routine procedures. So in these circumstances, you have to write those specific procedures. Students, remember, you would get the credit in exam only if you write those specific procedures, those additional procedures which are required in above circumstances. Yes, students, quickly, what would you do? So management is saying like we are making a plan, we are discussing this with our bankers. So please restructure our loan. Okay, we are in trouble. So, but in these circumstances, what the auditor is expected to do, which procedures he would perform, and what kind of audit evidence he is going to get out of this. Yes, guys, quickly come on. Yes, yes, Miss Mansoori. No, no, inspection of what? Harshit, inspection of what? I'm telling you, you have to write specific thing. Writing inspection won't fetch you any credit. Inspection of what? What what document he would verify, he would inspect. Yes, yes, Anurag Marana, you are correct. Consider the reliability of cash flow forecast. Now, this is the key word, students, under examination conditions, which you have to remember that the auditor would examine the reliability of cash flow forecast. Obviously, the management is giving you assurance. So you would tell him like, say, please prepare a cash flow forecast for next 12 months from where funds are going to come and how you are going to spend, how you are going to meet your liabilities. He would see whether those estimates are reliable or not. Only then he will be satisfied. So, like if Anurag has written, consider the reliability of cash flow forecast, and he is writing uh, the points linked to that, obviously he would be getting full credit in the exams. Yes, well done, Anurag. So, where these conditions have been identified, so the auditor would do these things. Like if the company has still not performed assessment of its ability to continue as going concern, it would first ask the management to do so. Now remember that it is first management's responsibility to prepare an assessment that the entity is going concern. They have to justify it. The auditor has to evaluate that estimate. Always remember that. Okay. So he would ask, what are your plans? And he would evaluate management plans and say where the company obviously plans only plans. Rishika, there is no WhatsApp group. Sorry. Only plans are not going to uh, provide the evidence to the auditor. Obviously, he would be interested to know what realistic basis these plans have. How and this can only be known by getting a cash flow forecast prepared, where he would know that liabilities, the payments which are going to fall in the next 12 months, from which sources funds would come, how the entity is going to run its business. Okay, so he would analyze the cash flow forecast and he would evaluate the reliability of the data generated to prepare the forecast. So obviously, if a company has prepared cash flow forecast, then you would see the basis, the assumptions on which cash flow forecast has been prepared are reliable or not. Say if I am saying that uh, that my loan payments have been deferred by say 4 or 5 months, then I would need some sort of evidence in support of that, like whether the bankers have in fact restructured the loan, what are the terms and conditions, when the next payment is falling due, like this. So considering whether any additional facts have become available since the management, or it may so happen that management has made its assessment and some new developments have come in place. So all those things would be taken care of by the auditor and requesting return representation. This, as you understand very well. Okay. Clear, students? So this is a very important question, I would say, and many a time it is being asked in the exam in different forms, like they would prepare some different situation and request you to answer this. Okay. So Anurag Maharana has answered it correctly. Yes. Question number 4. Now see this. This question is on written representations. Essay 580. In fact, this question has come in one of your exams. Now see, the management changed during the period under audit, and so the new management was of the view that they can give written representation from the date they took over and not for the prior period when old management was managing. This is the one question. And one part is related to the date and period covered by written representation. Now, what should be the date of written representations? Yes. Answer these two parts. Students, again, I am telling you, when you are answering the question, see what specific things are being asked, because for each specific thing, there would be some mark allotted. Okay. Yes, yes. Come on, guys. Tell me, what do you know about the date of written representations? Now, these should be dated. What you have read about the dates stated on written representations in essay 580. Yes, waiting for your responses, students. Yes, date before auditor's report on financial statement. Ms. Mansoori, you are perfectly right. They should be dated as near to as date of auditor's report. But they cannot be after the date of auditor's report, because in that case, their purpose would be defeated. Auditor has already signed and given the report. But they should be as near to as near the date of audit report, because uh, because because it increases, because the auditor has to consider all the events occurring up to the date of auditor's report. So that is the justification logic behind it. And what about the second part? And period also, it is so period, obviously period to which the financial statements relate. Yes. And what about the second part? Whether for prior period the new management can give written representation, or they can say, look, we can't give written representation. Now the management has changed, so we do not know about the past period. Yes. Yes, all periods. So management has to give representation for all periods. Yes, Harshit, you are right. Even when they were not present, they have a responsibility to provide written representation for the past periods. Okay. Now see question number 5. During the audit of a company, CA Jack obtained written representations from management regarding all known instances of non-compliance with laws. So the auditor has obtained written representation from management regarding uh, any violation of laws, and he has considered those effects in the financial statements. So, however, during the audit, he observed that information provided is incomplete, and audit evidence indicating such non-compliance contradicted the written representations, casting doubt on their reliability. How should CA Jack proceed in this situation? Now, the evidence he has obtained during the course of audit, it is saying something. And management, by virtue of a written representation, the management is saying something. Now, what does this denote? This denote that written representations may not be reliable, that uh, the management lacks integrity. Okay. So how should CA Jack proceed in this situation? Yes, alternative procedures. That is also correct. But what else behind besides alternative procedures? So he should, obviously he would try to resolve the matter by performing alternative procedures, by performing other procedures to resolve those differences which are coming by way of evidences obtained during the audit and written representations given by the management. However, if the differences are not resolved, um, or if he feels that management is lying to him, uh, as per assertions contained in the financial statements, as per assertions contained in the written representations, so therefore he would be considering the impact on his opinion. He may have to modify the opinion. This line you have always to write. Okay. So if there is some question on this part that management is not providing it, so obviously you would write that the auditor should perform alternative procedures and try to resolve the matter. If the matter is not resolved, then you should also write that it is he would see impact upon his opinion, because it is the opinion ultimately which matters. See question number 6. Now again on essay 570. going concern. Now, during the audit of a company, the auditor has noticed that company is facing significant skilled labor shortages. Labor is not available. So it is resulting in the operations of the company being affected. So production is suffering. So the company is manufacturing is dependent upon skilled labor coming from villages in eastern UP. Now, however, the some job opportunities are available there, so labor is not coming. So there are some products for which skilled labor is required. In Hindi, you say karigars, okay, skilled labor. So therefore, the company is not able to keep up its production schedule, and fixed costs of the company remain at high level. So, and since the company is not able to obtain that desired level of sales, so the liquidity position is also precarious, and the company is not able to pay creditors on time. Again, same thing, bankers of the company are not willing to also to help. So the auditor has doubts over going concern. So how should the auditor, maybe what audit procedures shall be performed by the auditor? So first, you have seen in first para what is given. These are the examples of operational events. In second para, operational events have led to the formation of financial indicators. Okay. So how should auditor move in the situation? Which audit procedures should be performed by the auditors? Yes, Anurag, what you are asking, can Jack reconsider the assessment of incomplete information, audit evidence which contradict the written representation? Okay, you are asking about the earlier question. Can Jack reconsider the assessment of incomplete information which contradicts the you are not clear in what you are writing, Anurag. Say if written representation says that there are certain non-compliance with laws, 1-2 instances have been given, but during the course of the audit, the auditor has found some more instances. So it means that the written representations are not reliable. So first of all, he would quiz the management. What is the reason? Okay, why you have not provided these detail in your written representations? He might come to know about certain genuine reasons. However, if he thinks that there is no genuine reason, then obviously it casts a doubt upon the reliability of written representations, and he would consider the impact on his opinion. Yes, Anurag, is it clear? Yes, question number 6, students. Yes, Harshit, same question, same thing. Cash flow forecast, reliability of underlying data. So these are all same question which we have done earlier. Uh, it is stated in a different situation. It is stated in a different language. Yes, clear, students. Yes, question number 5 and 6 both are clear to you. Yes, Anurag and Harshit. Yes, students, please drop mail quickly. Yes, and what about you, Anurag? Okay, that's fine. So now quickly, seventh question. This is on uh, essay 560, subsequent events. Now students, in subsequent events, you have read a term, date when the financial statements are issued. Now, question is asking you about this. What is the meaning of this term? Date the financial statements are issued. Tell me, who can tell me? Yes, quickly. You have read the question? Simple, straightforward question. What is the meaning of the date the financial statements are issued? And then it is asking another part. It is very simple, common, plain sense. Apply common logic, students. Yes, Harshit, you are right. Date when financial statements means the date when financial statements are issued to the third parties, like say to the bankers, to the regulators. So they, always remember there are three dates. Date when auditor signs a report, date of report. Date when the report is made available to the client, to the entity. Okay. And still there is a date when it is made available to the third parties, like to the bankers, to the shareholders, to the stakeholders, to the regulators. So this is the meaning of date the financial statements are issued. Can it be later than the date of providing auditor's report to the entity? Obviously, it can be later than that. It can be the same date or it can be later than, but it cannot be earlier than the date of providing auditor's report to the entity. Because first of all, the report would be provided to the entity, to the client, and then it would be made available to the stakeholders. Or it can be on the same day also. Okay. Now see question number 8. This is about just the meaning of going concern. Now this I had told you at the very beginning that going concern is a fundamental accounting assumption. Okay, read the situation and tell me, is the view of the management appropriate? How does the going concern affect the preparation of financial statements? I had given you an overview of it in the beginning. Now the company's revenues are expected to grow, it is saying, but the company has reflected net losses in the financial statement for last 2 years. It has managed to meet its financial commitments. So financial statement of last 2 years are prepared on going concern basis. Now the management in the current year also wants to follow the going concern basis of accounting. Is view of management appropriate? Yes. Yes, Miss Mansoori, you are right. What you are stating, it is not clear whether you are answering question number 7 or 8. Yes. And friends, my one advice to you is, rather tip to you is that do not get frightened by the length of the question. In in case of CA students, we generally see that students get frightened by such lengthy paragraphs, and they say that they would have to read such a lengthy paragraph, their time gets wasted. So you have to develop students reading habits, to read quickly and to read the relevant and to spot the relevant material. No, Miss Mansoori, your writing management's view is not appropriate. But Miss Mansoori, I'm sorry to say that you are wrong. See, what is the meaning of going concern? The meaning of going concern is that the company would be able to meet its liabilities. It has neither the intention nor the necessity of materially scaling down its operation, and it is able to meet its liabilities. So in this case, students, although the company is incurring net losses, the word is given net losses. So if in profit and loss account, a company is showing net loss, so does it mean that it is not a going concern? Net loss may be due to depreciation or due to higher fixed costs in the initial years. But the company's business model may be good. It is quite clear from this situation that the company's business is expected to grow. Okay, and it is also managing its financial commitments. It is paying all its loan on time. So it is meaning, it signifies that the company is uh, somehow keeping its operating cycle going. It is not defaulting on any sort of financial commitments. So therefore the view of management is appropriate. Yes, Ms. Mansoori, is it clear to you? No, Harshit, how it is to be prepared on liquidation basis? The word used is net losses. It is not that the company is incurring losses in its very operations. It is not incurring gross losses. Like students, like all these startups you are seeing these days. So these may be incurring net losses in initial years, but they are having high valuations because it is expected that their businesses are going to grow and they would recoup all their losses. Clear? See question number 9. CS Sumit has been appointed as a statutory auditor of Core Limited. List out some matters that he may consider in determining whether a deficiency or combination of deficiency in internal control constitutes a significant deficiency. So how would you determine whether a deficiency is a significant deficiency or not? So tell me first of all, what is a significant deficiency? SA 265. Yes, students. Yes, Harshit. Yes, loss due to fraud for assets. So, like, so you have to correlate it with the internal control again, Harshit. Now, what is a deficiency? Deficiency in internal control means when the control is not able to prevent a material mistake or the control is missing, and these deficiencies are of such nature that these are required to be brought to the knowledge of the management. Now, what could be such matters? Like the susceptibility to loss or fraud of related asset. Like some asset or fraud uh, is fraud prone. Okay, like there is some inventory which can be defalcated by the which can be misappropriated by the employees. Okay, so the or if some estimates are being made in the financial statements, then they are very complex. Okay, so these the auditor would have to see uh, controls relating to these matters to see whether these constitute significant deficiencies or not. So some examples are given. You can see these examples. Now see, again this question is on SA 560 subsequent events. Read this question. During the audit of a company for year 31st March 24-25, the auditor was in process of finalizing audit report dated 30th May. So the auditor is expected to sign the report on 30th May. The engagement partner emphasized that CAZ shall perform audit procedures to determine all subsequent events that require disclosure or adjustment in the financial statements. Which audit procedures should CAZ perform? That all subsequent events are identified. First, starting from where SA 560 starts, it states that which audit procedures should be performed by the auditor to see that subsequent events have been performed, have been identified, and their effects have been adjusted or disclosed as required. Yes. Yes, students, quickly. Yes, inquiry from management. Inquiry is one thing. So understanding the system of the management, that how it is identifying subsequent events, reading interim financial statements, going through the books of accounts of the interim period, reading the minutes of the meetings. Okay, so these are some of the audit procedures that would be performed by the auditor. Obtaining an understanding of the procedures. So first of all, you would see as an auditor what system has been established by the management to identify subsequent events. And second, you would inquire. See, there is a mark for every one step you are going to write. So if it is a 4-mark question, you would be getting 1 mark each for every step. Inquiry of management, reading minutes of the meetings that have been held after the date of financial statements, reading entities' latest subsequent interim financial statements, if any. Clear? Now see question number 11. Read this question. This is also in your module. This is test your understanding question. Now the auditor has found that physical verification is not of inventories is not conducted at regular intervals as stipulated by management. So the management has instituted a control that physical verification of inventories is to be conducted, say, quarterly or every 4 months. Okay. So, but he finds that this system is not being followed. So the auditor thinks that it is a significant deficiency in internal control. So since it is a significant deficiency, it needs to be brought to the knowledge of the management. So he points it out to the management in as under. He communicates to the management as under physical verification of inventories is not being conducted at regular intervals as stipulated by management. So the question is asking from you is this communication proper? Yes. In context of SA 265, you have to answer it in context of SA 265. What should be the answer to this question? Yes, guys, quickly. Yes, Anurag, Harshit, Miss Mansuri. Yes, Harshit, you are writing correctly. So he is not only to write what the deficiency is all about, but he has also to state the potential effect of this deficiency in the internal control. So he would have to state that what is the potential impact of not carrying out inventories, physical verification of inventories at the stipulated intervals, because it may lead to misstatement of inventories impacting profits of the company in financial statements. It is one of the important controls, and therefore responsibility should be fixed that this control is being followed, being adhered to. Clear? Yes, see question number 12. Again, essay 570. Companies, again, students, same question, which we have discussed, but again a different situation. Companies' turnover has come down due to loss of markets. Companies in need of funds, but bankers are not willing to lend. So, which additional audit procedures? So, these are the events: loss of major market, operating event, key customer, operating event, bankers not willing to lend, financial event, which indicates material uncertainty regarding ability of entity to continue as going concern. Okay. So again, same answer. Ask the management to prepare its assessment if it has not been prepared. See cash flow forecast. Evaluate underlying data. So same answer. Request written representations. So straightway question. Students, I think this question had recently come in your, if I'm not wrong, I think it had come in your May 25 exam. Straightforward question. Give 5 examples of operating events or conditions which may cause significant doubt on the entity's ability to continue as going concern. SA 570. So you have to write examples of 5 operating events. Remember, the question is asking about operating events like labor difficulties, like loss of markets, loss of key personnel, okay, shortage of important supplies. So these 5 examples you have to write. See question number 14. Again, written representations, SA 580. So the management has provided the auditor with a written representation regarding its responsibilities for preparation of financial statements and certain other written representations are also requested by the auditor. So which other written representations are requested by the auditor, may be requested by the auditor in respect of what matters? The question is asking from you this. Yes, quickly, students. Yes, whether accounting policies, selection of accounting policies are appropriate or not in respect of liabilities, contingent liabilities, titles to or control over assets. Okay. So compliance with laws and regulations. So these are some matters from which, in respect of which the auditor may seek written representations from management. Now see question number 15. Again, SA 570, cash flow forecast. So here the question is uh, asking from you two specific questions that the auditor has asked for a cash flow forecast from management for next 12 months. Answer the following. What can be the likely purpose of CAZ in the above situation? Now, what would be the purpose of CAZ in asking cash flow forecast from the management? And state two procedures in relation to cash flow forecast. Now, it is specifically asking about cash flow forecast only. Yes. What would be the likely purpose of auditor in obtaining cash flow forecast from the management? And state any two audit procedures in relation to cash flow forecast. Yes, guys, quickly. This you can very easily answer, Anurag. Yes, the purpose is obviously to obtain sufficient appropriate audit evidence on entity's ability to continue as a going concern. And audit procedures in relation to cash flow forecast is to evaluate the reliability of data stated in cash flow forecast and checking whether the assumptions prepared in forecast are supported properly or not. Clear? See question number 16. Now here it is asking from you about the meaning of TCWG. See essay 260. So you have to state that in smaller concern, management and TCWG may be same because TCWGs are the persons who are responsible for strategic direction of the entity. Okay, for overseeing the strategic direction of the entity. So you would write examples like in bigger companies, like in listed companies. These can be different, like audit committees can be there in listed companies. Okay. Now see question number 17. This question has also come in actually in one of your papers. So essay 560, subsequent events. Read this question. It is asking from you to analyze the issue involved and give an overview of auditor's responsibility in such a situation. Yes. Yes. So students, the auditor is conducting audit for financial year 23-24. The audit report was signed by her on 19th April. So after signing the audit report on 25th April, the company received a communication regarding some past incentive pertaining to year 23-24 that which was to be received from the government. It has been approved. Earlier it was not approved. So, and even it was paid to the company before end of April 24. Now, audit report has already been signed. So the financial statements of company were not yet issued to shareholders. So it means these may be issued to the client. These have been signed or they may be issued to the client, but these have not been issued to the third parties, to stakeholders. The board of directors wish to include the incentive amount in financial statement and request the auditor to issue a fresh audit report. So you have to again write that it is the situation above is an example of facts which become known to the auditor after the auditor's report, and it is of such nature that had it been known to the auditor before the date of auditor's report, then the auditor would have amended his report. Okay. So obviously the company in such a case can amend its financial statements, and the auditor can audit the amendments, and a new audit report can be issued. Clear? See question number 18. Again, essay 265. So same question which we had earlier done about the physical verification of inventories. Now the same question but different situation. Answer is same. Now here the auditor has pointed out a significant deficiency in internal control, and he communicated these deficiencies to TCWG as under: controls over significant transaction for related parties are weak. So the question is asking from you two things. That what is meant by significant deficiency, you have to write the definition of significant deficiency, as per SA 265, and then you have to explain whether this communication is proper or not. So the answer is same, that this communication does not detail about the potential effects and what should be done in this situation. So you have to write this, okay? Because if controls over significant transaction with related parties are weak, so it may lead to potential misstatements in the financial statements with the related party. Okay. And responsibility should be fixed for certain persons to ensure that such controls are effective and are working effectively. Yes, clear, guys. So you can see that again, same concept, same topics are there, but situations are different. So these are all application based questions. What we call them as application based questions. So you have to you have gained the understanding of a topic. So you have to apply that topic in a particular situation. Clear? I think so. We have quickly done all questions of this chapter. Yes, students, are the questions clear to you guys? Questions and their answers? So students, our next chapter is audit report. Chapter 8 is audit report. So as you know, this chapter deals with uh, following essays: essay 700, essay 705. Essay 700 is forming an opinion. Essay 705 deals with the modification of opinion. Essay 706 deals with what? Tell me quickly. Essay 701 and essay 710. Yes. Yes, students, what does essay 706 and essay 701 deal with? Yes, 706. Yes, you are right, Miss Mansoori. Emphasis of matter paragraph and other matter paragraph. And what does essay 701 deal with? Yes, communicating key matters in auditor's report. Yes, very good. So, can anybody tell me what is the difference between emphasis of matter paragraph and other matter paragraph? Yes. What is the difference between emphasis of matter paragraph and other matter paragraph? Yes, students. As per essay 706. Yes, 710 is for comparative information. Yes, comparative corresponding figures and comparative financial statements. Yes, can anybody tell me difference between emphasis of matter paragraph and other matter paragraph as per essay 706? Yes, Miss Mansoori, Anurag, Harshit, and all others. Yes, Ms. Mansoori, you are writing something. EOM paragraph means, according to auditor's judgment, it should be known to users of financial statements. No, no, but how it is different from other matters paragraph? So always remember, students, that emphasis of matter paragraph always refers to information which is disclosed in the financial statements. So the auditor wants to emphasize, brings to knowledge of the users by highlighting this information in EOM paragraph by way of separate EOM paragraph, because the auditor thinks that such information is of sufficient importance and it needs to be stated because it would increase the user's understanding of the financial statements. And other matter paragraph can relate to matters like auditor's responsibilities, relating to audit. Okay, so these matters are considered in other matter paragraphs. Clear, students? So we will come to again it when questions come. So let us start with some questions. And what are key audit matters, students? First of all, also tell me quickly. 701, as per SA 701, what are key audit matters? Yes, quickly. What are key audit matters as per SA 701? Yes, Ms. Mansoori. Yes, quickly, anybody? Harshit, Anurag. Yes, most significant matters of the current period, which were communicated with management, with those charged with governance, and the auditor states these key audit matters and also states how these were addressed by him during the course of audit. Like say the auditor has identified the revenue recognition as a key audit matter. Okay, and he has communicated with management from time to time, with those charged with governance from time to time regarding various aspects of revenue recognition. So now he is stating that revenue recognition as a key audit matter, and he would also state the procedures he performed in respect of such key audit matters. Okay, like which risk assessment procedures or which substantive procedures he performed. Okay. So now see this question. This question is on Caro 2020. Yes, students, you have remembered all the clauses of Caro 2020. So every time one question is coming from these clauses, because at CA intermediate level, you would be required to either state the clause or very basic application. Very basic application, not typical, not complex. So my request to all of you is to remember all the clauses of Caro 2020. See this question. There is a company and it has been sanctioned working capital limits of 5.99 crores from a nationalized bank on basis of security of current assets. So students, you first of all, my question to you is, you understand the meaning of working capital facilities, working capital limits. What does this mean? You have already done chapter on audit of banks. Yes, Caro is too lengthy, Anurag, but you have to remember the clauses. So once you devote 1-2 days, so once you remember these, then it would be only an half an hour revision. Yes. Yes, who knows about the meaning of working capital limits or working capital facilities? What is their purpose? Yes, guys, quickly, quickly. Anyone? Yes, Miss Mansoori, Anurag, Harshit, others. Yes, anyone, guys? You do not know the meaning of working capital facilities? Yes, Ms. Mansoori, right. Amount provided to meet working capital requirements. So working capital, as you already understand, to uh, to meet the expenses which are required for running of a company, for running of a concern, like for payment of wages, for procuring supplies, for making payment to creditors. So all these. So these are known as working capital facilities. So 5.9 crores, the working capital limits have been sanctioned. SKN Limited considers that inventory is material to financial statements and performs here probably there is a name mistake. Here there should be name of the auditor. Inventory is material to financial statements and performs audit procedures or company's final inventory records to determine whether they reflect actual inventory count and without any major discrepancy. What are the reporting requirements regarding physical verification of inventory under Caro 2020? Now you have to state clause 2 of Caro 2020. Now what does clause 2 state about physical verification of inventories? On which two matters the auditor has to report? Yes, who can tell me? On which two matters the auditor has to report in the given situation? Simple basic application, direct application. If you know the clause, you have to write that only. No, no deeper thinking is required. That would be expected from you at your CA final. Yes. Yes, students, please answer on your mail, on BOS mail, not in Zoom chat box. Yes, guys. That is a small part you are referring to, Anurag. So you have to state the complete clause. You have to state whether physical verification of inventory was conducted at reasonable intervals by management and whether the coverage and procedure of such verification by management is appropriate. This line you have to write, and whether any discrepancies of 10% or more were noticed in each class of inventories. In each class of inventory means separately for raw material, separately for WIP, separately for finished goods. And if such discrepancies were noticed, whether they have been properly dealt with books of accounts. Okay, and in this given case, the company has been sanctioned credit facilities, working capital limits. So exceeding rupees 5 crore. So in case of companies which at any point of time working capital limits in excess of 5 crores have been sanctioned on the basis of security of current assets. So in such cases, borrowers have to submit some quarterly statements, okay, returns, which we in ordinary language call as stock statements. So the auditor has to verify whether these stock quarterly statements submitted by the company with bankers are in agreement with its books of accounts or not. If not, then details have to be given. Now see if this is a form marker question, and this would be divided into 2 plus 2. So any student who writes complete clause covering all these aspects, he would be getting complete 2 marks for first clause and 2 for second clause. Total, he would be getting 4. But if you write only part of this clause, then the auditor may award you, sorry, the examiner may award you only 1 mark. Okay. Yes, you have to write the entire clause, Anurag. It is not that you can write just a part of it. So if you write only a minuscule part of it, the auditor may, sorry, again, I'm telling, I am speaking auditor. So the examiner may award you, may not award you even 1 mark. Yes, you have to write the entire clause. That is why it is a law-based question, and it has to be remembered as such. Yes, clear, guys. Yes, Anurag, is it clear to you? Yes, Anurag, is it clear? Please drop a mail. Yes, you can do so, Anurag. You can write the clause in pointer if you are not comfortable in writing it, but provided you have to write the essence that you can't leave any point if you want to get full, if you want to fetch full marks. Yes, friends. So guys, we shall be taking a short break of about 5-10 minutes. Don't go away. We shall be back. So Manish, a break. Yes. Yes, welcome back, students. So see, next question, students. It is a direct question. Again, knowledge-based, memory-based question. CARO 2020 shall apply to every company, including foreign company, as you know. However, it specifically exempts certain class of companies. So the from where the CARO begins, at the starting, it is written that it shall not be applicable to these class of companies. So you have to write those. So it is a direct knowledge memory based question. Yes. For which class of companies CARO 2020 is not applicable? Yes, friends. Do you remember? Yes, Anurag. So in respect of these companies, the auditor uh, is not required on matters which are required under CARO reporting. Yes, Ms. Mansoori, you are writing banking company. Yes, that's right. Insurance company. That's also right. OPC. That's also right. Small company. Anurag. Yes. And there is one more category. Yes, guys. Section 8 companies. Yes, that's also right. One more category in which there are certain thresholds, certain criteria, certain conditions to be met. No, no, company default in repayment of loan. There is no such category. Ms. Bhavesh, it is totally wrong. Yes, Anurag, private limited company subject to certain condition. So a private limited company which is not a subsidiary or holding of a public company and which is having a paid up capital and reserve and surplus not more than 1 crore as on balance sheet date. Second, which doesn't have total borrowing exceeding 1 crore from any bank or financial institution at one point of time, and revenue which doesn't have revenue exceeding 10 crore during the financial year. So all these three conditions have to be met. If a private company, all these three conditions are met, so it is also exempt from CARO reporting. Okay, clear? Less all others you are writing correctly. A banking company, CARO is not applicable. Insurance company not applicable. OPC 1% company not applicable. Company Section 8 company licensed to operate under Section 8 and a private company subject to certain conditions relating to turnover, relating to paid up capital and reserves, relating to borrowings from banks and financial institutions. So it is 1, 1 and 10. Okay. Remember like this. Now this question is on joint audit. Yes, which essay deals with joint audit of financial statements? First of all, tell me. Which essay deals with joint audit of financial statements? Can you remember the name of standard on auditing? Yes, yes, Anurag. If the yes, essay 299, Miss Mansoori, you are right. So if a private company doesn't meet these thresholds, then CARO 2020 is obviously applicable. In fact, in most of private companies, CARO 2020 is applicable because such companies which are having paid a capital of reserves of less than 1 crore, bank borrowings less than 1 crore, and turnover also less than 10 crore. So these may be few in number. To many private companies, Caro 2020 is applicable. Yes, SA 299, all of you are stating correctly, Ms. Bhavesh, Anurag. So the question basically asked from you is the company has appointed 3 joint auditors, 3 CA firms. So for which audit work the joint auditors will be jointly and severally responsible. So you have to write about in this respect responsibilities of joint auditors for the work for which they would be jointly and severally responsible. Jointly means combinedly, jointly, severally means individually. ठीक है? Okay. So you have to write all these responsibilities. The audit work which is not divided among the joint auditors and is carried out by all joint auditors. So obviously, when there are joint auditors, they would be dividing their work among themselves. So the work, there may be some common work which is not divided among them. So they are responsible uh, for all such work. So decision taken so by joint auditors under audit planning in respect of common audit areas. So joint auditors make planning decisions in respect of common audit areas, like in respect of IT systems or controls operating in IT systems. So they are responsible for all such decisions. And matters which are brought to the joint auditors by the attention to their attention by any other auditor, and there is agreement on such matters. Examining that financial statements comply with the relevant laws, relevant statutes. So joint auditors are jointly responsible. Ensuring that audit report complies with the requirement of statutes, standards on auditing. There is a combined joint auditors responsibilities. Okay. So these are requirements of SA 299 as you have already read in your module. Now, this is again a direct question, students. Now, I would request that all of you should answer this. What is the meaning of qualified opinion? What is the meaning of adverse opinion? What is the meaning of disclaimer of opinion? SA 705. Yes, students. What is the meaning of qualified opinion? First of all, tell me. What do you understand by qualified opinion? When does an auditor express a qualified opinion? Yes. Yes, Masuri, misstatement is material and but not pervasive. Yes. Basic intent is correct. So qualified means now students remember, I tell you how to remember this. Now there are two things. Either the auditor obtains audit evidence, sufficient appropriate audit evidence, either he is not able to obtain. There can only be two situations. So if after having obtained sufficient appropriate audit evidence, the auditor concludes that there are misstatements in financial statements which are material, okay, but not pervasive. So pervasive, I presume that you know the meaning. What is the meaning of pervasive? Yes, quickly, Ms. Mansuri. What is the meaning of pervasive? Yes, can anybody tell me meaning of the term pervasive? Question can come on this also. What do you mean by the term pervasive, which is used in SA 705? Yes, Harshit, you are Referring, you are stating what you are stating, applicable to overall financial statements. Harshit, pervasive means say when there is a misstatement which is not affecting one financial statement item, but too many financial statements items, or which is distorting the whole picture of financial statements. Okay. So the auditor, having obtained sufficient appropriate audit evidence, concludes that misstatements are material but not pervasive. Or if he is not able to obtain sufficient appropriate audit evidence, but he concludes that possible effects of financials of misstatements could be material but not pervasive. Okay. So in these two cases, he would expressing qualified opinion. So normally what happens is that students write this but forget this. So you have to write the both these conditions under which circumstances an auditor expresses qualified opinion if he has obtained sufficient appropriate audit evidence and it concludes that misstatements are material but not pervasive. And if he is not able to obtain sufficient appropriate audit evidence, but he concludes that possible effects of undetected material misstatements would be material but not pervasive. Okay. Yes, Anurag, yes, right. And under what circumstances adverse opinion is given? Yes, now tell me. Under what circumstance an adverse opinion is given? Yes, Harshit, you are writing auditor. See, while writing questions relating to audit report, you have to use slightly technical language. इज्जत वाली language थोड़ी use करो. Harshit, you are stating auditor found. So now the audit has been concluded. So auditor has obtained the audit evidence. He has concluded the audit. So obviously he has made certain conclusions and on the basis of which he is drawing the opinion. So you would have to write that auditor concludes. When the auditor concludes after having obtained sufficient appropriate audit evidence that misstatements individually or in aggregate are both material and pervasive to the financial statements. Both material and pervasive. Now, adverse opinion can only be issued when auditor has obtained sufficient appropriate audit evidence to conclude that there exist material misstatements which are not only material but these are pervasive to the financial statements. Therefore, he expresses an adverse opinion that financial statements do not reflect a true and fair view, that these are not prepared in accordance with the applicable financial reporting framework. Harshit, because this, say you are writing obtained, okay, it is also okay. But if you can remember the word, then it is fine. Why to change? So it's better if you write conclude. Because it is on the basis of audit evidence obtained that auditor has concluded. Clear? And when disclaimer of opinion is issued, yes, tell me. When disclaimer of opinion is issued, Yes, Anurag, you are right. So when the auditor is unable to obtain sufficient appropriate audit evidence on which to base the opinion, so the auditor is not able to obtain sufficient appropriate audit evidence on which his opinion is going to be based, and he concludes that possible effect on the financial statements of undetected misstatements could be both material and pervasive. Anurag, it is both material and pervasive, or it is not or, it is both material and pervasive. Now, Ms. Mansoori, again, you have to write the complete thing. When he is unable to obtain sufficient appropriate audit evidence, and he concludes that possible effects of material of undetected misstatements would be both material and pervasive. If you write on this much only, that he is not able to obtain sufficient appropriate audit evidence, you won't get any marks, because in that case, such a condition is also there in qualified opinion. When he is not able to obtain sufficient appropriate evidence, but he concludes that misstatements, undetected misstatements could be material but not pervasive. Clear? Yes, students, these three things, three types of modified opinion are clear to you. Qualified opinion, adverse opinion, disclaimer. Always remember, qualified, adverse, disclaimer of opinion, and write correct spellings, correct word. Do not write any other word in place of qualified or disclaimer of opinion. Okay. These are technical key terms and these have to be used as such. Now see next question. During the audit of a limited company as statutory auditor, you discovered that a fraud amounting to 5 lakh has been committed by the company. So reporting requirements under CARO 2020 relating to fraud. There are three requirements, I think, in relation to this clause. What are those requirements? And what is the clause number? Yes, you are sitting 11. Yes, it is 11. So the auditor is required to report the fraud under clause 11 of paragraph 3 of CARO 2020. These are the three requirements which you have to write. Whether any fraud by the company or any fraud on the company has been noticed or reported during the year. If yes, if fraud has been noticed, nature and amount involved. You have to write what is the nature, like what does the fraud relate to, and what is its amount involved, in this case, rupees 5 lakhs. And as you know, under section 143, subsection 12 of Companies Act, uh, when fraud is discovered beyond a threshold amount, then a report under ADT 4 has to be filed by the company. has to be filed by the auditor with the MCA. So whether such a report has been filed, whether the auditor has considered whistleblower complaints, if any, received during the year. So if some whistleblower complaints alerting the management of a possible fraud have been received by the company during the year or not. So all the reporting requirements you have to state. Okay. Yes, Anurag, you are writing correctly. Now, see, this is on SA 705. UN paragraph. Read the question. There is a company and there is some legal matter going on, litigation, court case initiated by the industry regulator. Industry regulator has initiated some court case against the company, some legal action. The matter has reached jurisdictional high court. So the matter has reached high court. Okay. So keeping in view uncertainty related to the future outcome of matter, statutory auditor of the company has decided to include EOM paragraph in auditor's report. So the auditor wants that this matter is very important. It is already disclosed in the financial statements and it has also reached high court. So this should be included in the auditor's report under heading EOM paragraph. So what are the considerations which would be kept in mind by the auditor while including this matter in EOM paragraph? And second is state any two example of circumstances where the auditor may consider it necessary to include an EOM paragraph. Here you have to give two examples, and in first you have to discuss the considerations to be taken care of by the statutory auditor when EOM paragraph is included in auditor's report. Yes, guys, what should be the considerations to be kept in mind by the auditor while uh, stating a matter under EOM para as per SA 706? Yes, anyone? So if you do not remember the considerations, okay, give me the examples of two matters which should be included in EOM para. Dear students, waiting for your responses quickly. So obviously these are the considerations that there should be a separate para under an appropriate heading, emphasis of matter paragraph, very easy to remember. And in the emphasis of matter paragraph, he should clearly state the matter being emphasized and he should also give reference to the fact that where this matter is disclosed in financial statements. That is very important. Like I told you that EOM para uh, can be stated only in respect of those matters which are already disclosed in financial statements. Like we take example of this litigation matter. So this may be disclosed in the notes to accounts. Okay, so the EOM para would give a reference to the say note number 19 of financial statements where this matter is disclosed. So that the purpose of this is so that users can correlate it what is disclosed in the financial statements as by the management and what is stated by the auditor in EOM paragraph. Okay, and he has also to state that he his opinion in respect of the matter which is being stated in your paragraph is not modified. Modification is separate. So the auditor cannot abdicate his responsibility by stating that matter in EOM paragraph by drawing attention of users to it. If opinion needs to be modified, then it has to be modified. Okay. So but therefore, it is why that it is clearly required to be stated that in respect of matter which is stated in EOM para, the auditor's opinion is not modified. Okay. So examples of matters like which one example is given in the question itself, like an uncertainty relating to the future outcome of some litigation matter or a significant subsequent event has occurred, like a fire has occurred, major fire, destroying one plant of the company completely between the date of financial statements and the date of auditor's report. And auditor wants that this is an important matter and it should be disclosed in notes to accounts. Okay. So these are some of the examples in respect of matters which need to be included in EOM para. Yes. See question number 8. What you are going to write? Simple, straightforward question relating to section 143(1). Basically, this is a company law question, but relating to auditor. Section 143, company law based. Yes. Yes, guys, there are 4 or 5 matters there in respect of which he has to inquire. Which are those matters? In accordance with section 143, subsection 1. These are stated in your module in chapter 8. Yes, duty of auditor to inquire. Yes, under the heading duty of auditor to inquire. But what are those matters? The question is specifically asking from you what are those matters? Simple. You have to write those matters. Yes, whether personal expenses have been charged to revenue account, Harshit, yes, it is right. Whether loan advances have been shown as deposit, yes. Other matters are also there. Yes, who can write? Yes, transaction in books of accounts are not prejudicial to the entity. Yes, you are right. Obviously, you are remembering 3, 4 points. That's good. So, whether loans and advances made by the company on the basis of security are properly secured, and whether the terms, it means the say what is the rate of interest, what are the repayment terms, are prejudicial to the interests of company, whether the company is being harmed by such interests by these terms. So this is one point. Second point is whether transactions of the company which are represented merely by book entries are prejudicial. Again, there are certain transactions which are represented by merely by book entries are harmful to the interests of company. And except banking companies and investment companies, whether so much assets of the company at which consists of shares, debentures have been sold at a price at which less at a lesser price than at which these were acquired, whether loan advances made by the company have been shown as deposits, whether personal expenses have been charged to revenue account, and if shares have been allotted for cash, whether cash has been actually received, whether position stated in books of accounts is correct and not misleading. So these are the points. Again, law-based question, knowledge-based question, you have to write those points as these are. Now see question number 19, again on joint audit of financial statements. What should be answer to this question? Essay 299. Read the question, students. There are two joint audit firms. So they are developing, they need to discuss and develop a joint audit plan. So in joint audit plan, they should identify and divide the audit areas and common audit areas. So explain stating the other relevant consideration in this regard. Now, which considerations are to be taken care of in this regard in accordance with Essay 299? Yes, guys. Yes, anyone who can answer? So students, in some of the questions, the answer starts from the question itself. Now their joint auditors are planning for joint audit. So they have to divide their respective audit areas and common audit areas. So in planning, what they would do? They would do these things. They would identify division of audit areas and common audit areas. This is going to be the first step. They would ascertain reporting objectives of the engagement. Okay. And they all consider and communicate among all joint auditors the factors that are significant in directing engagement team efforts. Now, how the audit is going to be conducted. So all uh, the factors in this regard in directing the team effort should be communicated to the all the joint auditors, because in absence of it, an effective audit would not be conducted. Consider the results of preliminary engagement activities or similar engagement activities. Preliminary engagement activities, you remember, students, we had done in chapter 2, audit planning. Remember, what are preliminary engagement activities? Yes, can somebody tell me? Let us see whether you remember chapter 2 or you have forgotten. Yes, what are preliminary engagement activities? We had covered this in chapter 2. Oh, consider the result of preliminary engagement activities. Okay, Anurag, but what do we mean by preliminary engagement activities as per SA 300? Yes, client relationship, whether this should be continued or not, or in case of a new client, acceptance of whether new client should be accepted or not, compliance with ethical requirements. So these were all the things. Yes, Anurag, think Harshit, some of you have forgotten about chapter 2. Okay. Ascertain nature, timing, and extent of resources necessary to accomplish the engagement. Again, question number 10. Mr. Chetan is appointed as auditor of Spot Limited, a small company. Mr. Chetan is aware that Caro 2020 is not applicable to small company. So list out the classes of companies that are specifically exempt. So again, same question relating to exemption from Caro, but worded differently. So except for small companies is already given that they are exempt. So, but the form of question is different. So you have to write the other companies. OPC, Section 8, banking, insurance, private company, meeting certain thresholds, criteria of turnover, criteria of revenue, criteria of borrowings from bank, financial institution, paid up capital and reserves. Okay, same question, same answer, but uh, it has been structured in a different way, formatted in a different way. Okay. Again, see this question. Now, what you are going to write? Again, same type of question, but again, the language is changed. Yes, guys. What you have to write in answer to this question? After reading the question, tell me. Yes, qualified, adverse, and disclaimer. You have to write about all these things depending upon the materiality and pervasiveness, on the twin considerations of materiality and pervasiveness. Okay. Now this question is on SA 701, key audit matters. As per SA 701, objectives of auditor are to determine key audit matters. So tell me, guys, in which type of companies mentioning of or stating of key audit matters is mandatory for an auditor? Do you remember? Yes. Yes. Who would answer this? For which type of companies, for which class of companies, there is mandatory reporting of key audit matters by the stat auditor? Yes. Who remembers this? Yes, Anurag, you are perfectly right. Listed entities. Ms. Mansoori, you are right. Listed companies, listed entities. So as per SA 701, the objectives of auditor are to determine key audit matters having formed an opinion on the financial statements and communicate those matters by describing them in auditor's report. Now, which factors are taken by the auditor while determining key audit matters? Taken into account. How key audit matters are communicated in audit report? Yes. What you are going to write? What are the considerations to be kept in mind by the auditor uh, while determining key audit matters? Yes, guys, quickly. Yes, area with high risk of material misstatement. What else? Areas of higher risk of material misstatements, effect of significant transactions, significant auditor judgments relating to areas in financial statements, like say the management has made exercise significant judgment in making certain estimates, in making certain accounting estimates. So this could be also one of the matter for considering this matter as a key audit matter. Okay. So how should the auditor communicate? It means while drafting key audit matters, how should these be stated? So the auditor has to state, first he has to state the meaning of key audit matters, that what are key audit matters. Okay. So he would be stating that key audit matters are those that in auditor's professional judgment were of most significance in the audit of financial statements of current period. And these matters were addressed in the context of audit of financial statements as a whole and in forming the audit opinion, and the auditor does not express a separate opinion on it. So it has to be clearly communicated to the users of financial statements that these matters were considered while forming opinion on financial statements, and the auditor does not provide a separate opinion in respect of these matters. So what we are stating under the heading key audit matters, these have already been considered. We have performed certain procedures, and based upon audit evidence which we have obtained upon performance of these procedures, we have formed our opinion. So the auditor is not expressing a separate opinion on individual key matters which are stated in the audit report. That is an important point while communicating such events. Clear, students? Yes. And now we come to last question on two approaches of in as stated in SA 710. So as you know, there are corresponding figures and comparative financial statements. So in corresponding figures, the figures of current period and past period are also given, but auditor's opinion on financial statement relates to current period only. Whereas in case of comparative financial information, auditor's opinion refers to each period for which financial statements are presented. So the general audit procedures are there in respect of auditing such information. Okay. And there is one more question. Yes, before we take up this question, Manish, आप unmute कर दो, कोई query है तो. Manish, unmute कर दो. Yes, yes, students, if there is any query, you can ask on Zoom. Yes, students, any query you can ask on Zoom. You can raise your hand and talk to me. You can talk in Hindi also if you so desire. So there is no query. So let us take up this question. So this again, students, is from your module. This question is, and it is in test your understanding questions. So Kiran, a CA student, was reviewing an audit report of the company when she noticed this 18-digit alphanumeric code. So there is a number written below the auditor signature. Alphanumeric means it contains certain alphabets and certain numericals like this. Okay. And membership number below the auditor signature and membership number. She wants to understand the purpose and importance of this randomly generated number. Is this code required for audit reports only? Yes. What is this number known as? What is this alphanumeric number which is given below the signature of auditor in every audit report known as? Yes, Harshit, you are stating correctly. UDIN, unique document identification number. So the auditor, when he is signing, so he goes on the UDIN portal of ICAI and he fills certain key figures, and a random number is generated which is alphanumeric, and he has to and OTP comes on his mobile and mail ID, and then he submits it, and then a number is generated, and he writes this number on the audit report. So it lends authenticity to the this number lends authenticity to the information. Okay. And this is required not only for every audit report but also for every certificate. This is also an important point you have to remember, that UDIN is required to be generated for every audit report and for every certificate given by the auditor. Okay. Clear, students? Is that clear again, students? I am asking from you. If there is any query, please let me know. Otherwise, we will have to wind up. So again, yes, Harshit, you are saying clear. Anybody else? So no query, students. Again, therefore, students, thanks very much for listening to me with patience. So we'll meet again on Saturday for revision of chapter 6, that is audit documentation, and chapter 10, that is audit of banks. So do join in large number, students. So do give your feedback in the feedback form. And I sincerely hope that I have tried my best to make you understand the key points, the basic points through the medium of questions of chapter 7 and 8. Thank you. Thank you, guys. And good night. Yes, Manish. Session is over. Yes. Yes.